Good day, everyone. This is Patrick from EasyFX Code Trading System, and this Saturday, the 22nd of April, 2023, and this is the weekly technical analysis for spot gold and dollar yen for the 4th week of April. And as we look at the spot gold, it gapped down from the start of the week, and after that consolidated for the rest of the week. Did manage to test the support at 1975 and was not able to climb up higher above the 2015 level for the week, and closed below 2000 for the week now. But it's still hanging on at support at the 2075 area. And similarly with the dollar yen, it climbed up higher right from the start of the week and finally hit and spiked through the 135 round figure before pulling back on towards the end of the week and managed to still find support at the 55th and then climb back up again above the 134 level. And for spot gold, it was a fairly narrow range for gold at only about 400 pips, while dollar yen was, without this lower spike, it would have been a tighter range, and it's about 150 pips for the week. So no major breakthrough yet, although it did, dollar did sneak up higher with the spot gold pulling back lower. And let's take a look at the review for last week and especially the flash PMI figures on the Friday. And then look forward for next week with the last week of key indicators before the major central banks are due to have their meetings. Federal Reserve on the 3rd of May. The RBA is a day before, and then with the ECB a day later. So let's take a look at the past week. Let's review last week, and the main key economic indicators for last week were the flash PMIs on Friday for all the major economies. But before that, on Tuesday and Wednesday, there was the UK jobs claims, basically their employment report, and there was higher figure for job claims, so that's negative for the economy, and also a higher CPI figure at over 10%, so which is higher than expected and not a good news for the economy as well, and for the Bank of England, which will be looking at that inflation figure. And then on the Friday, all the major economies showed better services PMI, so that's pretty good, showing some growth in their retail sector for all the economies, except their manufacturing were all down. However, the US managed to score a higher manufacturing figure above 50 after a long time. And so both the manufacturing and services PMIs were better than expected, and way above 50 for services. And then now coming to this coming week, the focus back on inflation with the US PCE price index, which the Fed is keen to look at. There's also the Australian CPI expected to come in at about 6.6%. There's also the Bank of Japan policy meeting. However, the not many changes expected with the new governor. And the key ones will be from the US on Thursday. There's advanced GDP with a 2% forecast and a PCE at a 0.3%. It has been, after a spike higher, it did come down to 0.3 for the last month. And it has maintained the forecast at 0.3. So this will be interesting to see whether it's going to stay the same or dip higher, dip lower, or maybe spike a bit higher. So this is a key one for next week to watch out for to end the month. And the last key figure for the Fed to look at before their 3rd of May meeting. All right, so we'll also see the US dollar index, the DXY, consolidating as well, same as the other major pairs. So last week it's all hovering at either their resistance or support levels for all the major pairs. All right, let's move back to the majors. All right, let's begin with spot gold. And right from the start of the week, it gapped down and continued lower with potential break of this rising trend line. And it closed as a spinning top for the day and managed to climb back up before dropping again on the Wednesday with the US CPI figure. Sorry, the UK figures coming back up higher, UK CPI, and that apparently moved together with spot gold as well. However, it finally gave up on Friday and fell below this trend line, closing below that and getting close to the 1975 support level. But it's still hanging on to avoid a significant drop. But managed to stay within a rectangle. We'll see whether this coming week there's going to be an attempt to test the 38 fib retracement area and getting close to the 1950 round figure. Okay, but this is a key break below this trend line. Let's see whether that's going to continue this week or whether it's just going to continue to consolidate for another week before the FOMC meeting. But this Friday will give some indication to the Fed if their favored inflation figure, the PCE price index. Let's see whether it's going to remain about the same or dip lower, or if it does dip higher, then US dollar could continue to climb up higher at the expense of the other major pairs and spot gold as well. On a weekly time frame, it closed as a fairly large spinning top, fairly wide range with a wide body, but indicating further weakness here after that spike to set a intra-year high. Close to the 2050 round figure, but it failed to attempt to test the all-time high at the 2075 So we'll see if this is going to be a significant resistance level, and could be some retracement first before another attempt later on to climb up, then test the 2000s level again. So let's compare this with the US dollar index, the DXY. All right, here's the US dollar index. And also consolidating after a strong push up at the start of the week, and then consolidated within that candlestick for the week, and within this range. So quite similar to the euro, the inverse fashion. Let's move the. I think we can move this out of the way for now. And support is still at this swing low. Intermediate resistance. We'll leave it here at the 38 fib. And then the key resistance at the 50 fib, and along with the 103 round figure. So unfortunately, last week was also still just consolidating within this box. Just positioning itself with some room to, from the support just above the 101, some room to try to break out higher, and it needs to break out to get to this 102.30 area. Otherwise, if it breaks down below 101, that's a potential retest of this swing low. Right, so key week next week to watch out for this price index figure. It's possible that it could continue just consolidate for another week. So another week of range trading. All right, so unfortunately nothing much for last week, and the weekly close was also a doji, same as the euro. Okay, let's move back to the other major pairs. And this week, the BOJ is set to have their meeting with their new governor, and unlikely that there's going to be any major changes, but we'll have to see. And of course, it's also exposed to the PCE price index figure. It did climb up higher from the start of the week, and finally hit and spiked through the 135 area for pulling back towards the end of the week, and managed to find support after the better than expected US flash PMIs, and managed to climb back up above the 50 fib. But also stayed in a narrow range. There's also the support along with the 50 fib, the daily 200 EMA. And let's see whether this trend line will provide further support. There's also 55 coming up as well. So there's still a potential to break out higher, either this coming week or the following week, and perhaps get to the 78.6 with retracement. On a weekly time frame, there's another spinning top with a test of the this previous long-term spike high here before, swing high, all the way back from 20 years ago, 20 over years ago. So that's that will be a clear break of this key resistance, which did manage to break through before, and then now it's going to try to attempt to break through again. And it tested it almost right there at a high of 135.14. It's about 1 pip away. Okay, so potential sideways move for next week again, but hopefully there could be some breakout before the end of the month, but likely it's fairly unlikely for now, unless there's a significant spike higher of the PC price index or a dip lower. Then there could be a breakout or breakdown either way. Okay, so do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.